I'll explain this trade that is one of my favorite trades. We this is a wedge double bottom. I don't know what this is double duplicated here, but we see, if we goes to the daily chart, low for yesterday was important, right, in terms of having that like support. So I didn't trade any of this when the beginning, so we probably could you will good short below 10, of course. But then when 11 came up, make a double bottom here. I bought 11 close, thinking on this FBO of this of yesterday. It just kept there, so it's pretty much the same trade. So since the 11 bar, so we have more than 3 hours the same trade. But I like to explain is this pattern here. So we have a wedge, one, two, three, pushes down, and then couple of legs up after a wedge, which is expected starting this, testing the start of the wedge. So this is normal. You can assume that it's gonna make a trend assumption, so you can sell this bar for probably 25 and trying to get again the low, but you are against a major support. So you can even, as I did, wait for this, and this is normal, right? So then you have 27 is a high low, the double bottom, and low and H2. So you can get long in 2028. It's an inside bar, but it's enough because the contact is good. Your protected stop needs to be below the 60 minute moving average, because it's also a magnet. So you need to put it below. But if in case of some ticks below 70 will be okay after 28, because what you want here in 28 is a follow through like 29. Right after you have 29 is better. You have better chances to get at least the height of the day, right? So inside, inside, outside, inside, inside. This is a reversal pattern, and H2. So H1, H2. So second entry long. So this is probably best entry of the day in terms of probability, because you are entering a second. You have a second entry long, right? So and then it's just to manage. So what's happening here is, you are in a trading range in the day, FBO of low for yesterday, so it's gonna try to break up. So we see here, look at the 33, just one push after this, or I reversal pattern H2. So one, two, right? 36 goes below 35, two and three. So this is a wedge here. So on 40, midday reversal bar, midday is just setting the limit midday. It's close above this channel line. This is a channel line here above. So it means that above 40 is a failed wedge breakout if I follow through. So 41, you see 41 is a breakout pullback. You see beautiful how it's getting back, gets down. And when it goes, is basically you make the measure move up of this wedge up. So it's going basically to test the high of the yes. That's why how you can identify. So, and I say this is one of the most beautiful patterns that you can use to get a good swing. So you see here you have more than, so if you enter here in 33, for example, above 33 or 32, you have more than 10 bar swings already, right? So what is the potential? The potential is go to test. They have yesterday, as the bars are closing above this trending line here, at least it's gonna test this opening gap here and gonna close that gap. So this is probably one of the best swing setups that we can find in any asset that we can trade out. Okay. So let's explain what you're expecting after a failed wedge, because that's important. Failed wedge trade, if you wanna, for example, buy 40, that is something that you can do. We're just expecting is momentum up. Why is that? Because This breakout here is a low probability event. As like Albrook say, when you have a low probability event, what is going to happen is that we're going to get this measure move quickly, right? Or it's going to test quickly and the next support or major resistance, right? So the next major resistance they have for yesterday, or even you can consider the close of yesterday as a major resistance. But you need really momentum, right? So if you buy this 40 and you see follow through in 41, follow through in 42, that's exactly what you want to see. Okay, but you don't want to see the bars getting sideways. You want really, if we have this 43 going down 42, it's okay, but then it needs to be bought immediately because you want momentum up. Okay, that's basically what you're expecting for, and you're expecting kind of behavior like this. It's going to test the moving average in 1 minute chart. You see how the buyers are showing up in the moving average, right? So that's the kind of behavior you would like to see when you're looking for momentum and the market is always in long. So after this breakout, market it's always in long. So you expect to have more buy the close traders, and then the price is gonna get up and up, right, until we get the next target for this trade. That is basically the high for yesterday. Let's see inside, outside, inside. This is kind of normal when you're testing the height of the day. So it could be more profit taking price action, and then when people getting out, probably we could have another spike here. Of course, if this 44, for example, has buyers above or sellers above, and then we have another outside bar closing below 44, then we can move for a stop below that bar because we don't want that going down in an L2 setup, in a double top L2 setup. We don't want that. That's essentially what we don't want to. This is an L1, this is an L2. Let's see how that one will close, but that's not what will look like. Now I'll tell you how we're gonna manage this. This is L1, this is L2, right? What I'm gonna do is trail my stop below this L2, right? We don't want that L2 be with follow through. So for me, for any swing that you will make, my recommendation is always, get out below an L2, right? Especially when you are in a trading range, an L2 is really killing. It's just enough to be an L2, even if it's a doji, doesn't matter. Doji, whatever it is, you need to get out, or in the close or below, depending on how you are in the day. So it's preferable to, how you're coming from a strong leg. It's preferably to put it below in order that if eventually it goes up, you still in, right? The reason for that is because you are with the premise that it's a trend. So if it's a trend, it needs to have buyers here in the moving average as we have here, right? And go up and break out this flag here. That's the reason why. So you don't want to have, follow through below that bar. So and that's I'm gonna move my stop below 45, right? There. We need that 45 being bought. If not, gonna get 6.25 points. That will be great for me. And that's it for this trade. So if eventually this bar fails, you can buy above that bar using a stop. But I think that's the most secure things to do. It's an L2, so we need to be careful. And I get to 6.25 points. Thank you.